The following content has been generated with artificial intelligence under minimal human supervision. The data presented may contain errors or inaccuracies. The opinions expressed in this content do not necessarily reflect the vision, position, or values of DigiAll. We recommend verifying critical information with additional sources before making decisions based on this content.
Welcome to DigiAll Tech News. Today is Sunday, February 8, 2026. I'm Kylie Brooks, and this is where technology becomes clear and engaging. Google leaps from AI laggard to leader, surpassing OpenAI with massive growth in its Gemini platform. Tesla unveils its unified AI architecture powering everything from self-driving cars to Optimus humanoid robots. Nvidia's CEO calls the software stock sell-off illogical and recommends 5 AI stocks for patient investors. Crypto.com founders spend $70 million on AI.com, the largest domain purchase in history. Qualcomm achieves a major milestone with 2-nanometer chip design in India, showcasing the country's growing semiconductor leadership. Let's start with Google, because honestly, this turnaround is pretty remarkable. Just a year ago, analysts were questioning whether Google was falling behind in the AI race. Fast forward to this week, and Alphabet's market cap has crossed $4 trillion, joining only Nvidia and Apple in that exclusive club. Here's what's driving this transformation. Google's Gemini 3 model launched recently, and by the end of last quarter, the Gemini app had hit 750 million monthly active users. That's up from 650 million, and what's really interesting is that user engagement spiked significantly after Gemini 3 dropped. For context, ChatGPT reports over 800 million weekly active users, so we're looking at real competition here. Google Cloud revenue jumped 48% in the December quarter, and the enterprise edition of Gemini now has 8 million paying licenses. CEO Sundar Pichai emphasized that their AI investments are driving revenue and growth across the board. But here's the reality check. Alphabet announced capital expenditures of up to $185 billion for 2026. That's potentially more than double last year's spending, and it's outpacing Microsoft, Meta, and Amazon. Analysts at Bernstein called the collective $1 trillion AI investment by mega-cap tech companies eye-watering, and they're asking the obvious question: what's the total addressable market that can justify these returns? Despite those concerns, investors are clearly favoring Google right now. Alphabet stock is up more than 80% over the past 12 months and about 36% since October. Compare that to Microsoft, which is down over 20%, and Oracle, down 49%. Both of those companies are closely tied to OpenAI, which has been struggling with funding and profitability. As one analyst put it, right now, Google has the hot hand. Now let's talk about Tesla, because Ashok Elluswamy dropped some fascinating details at the Scaled ML conference this week. Elluswamy is Tesla's VP of AI software, and he outlined the company's vision for what he calls a unified AI architecture. This isn't just about self-driving cars anymore. It's a single AI brain that powers everything from full self-driving vehicles to the Optimus humanoid robot. The core of this system is what Tesla calls a neural world simulator. Essentially, it's a generative neural network that can predict video frames based on actions, creating virtual environments that run in real time at 36 Hz. This simulator allows Tesla to train Optimus in high-fidelity virtual environments and then generalize those capabilities to the real world. Elluswamy made a strong case for what he calls the bitter lesson. Scaling generalist learning algorithms beats handcrafted rule-based systems every time. Tesla's approach is end-to-end, meaning a single neural network processes raw inputs like 8 camera video feeds, navigation instructions, and kinematic data, then outputs control actions directly. No separate modules for perception, planning, and prediction. He gave some great examples of why this matters. Imagine full self-driving, waiting for a stray chicken to cross the road, or smart summon navigating around geese in a parking lot. These are what he called mini trolley problems, and they require the AI to understand soft intent, something you can't program with rules. You need holistic learning from human driving data. To address the black box concern that comes with neural networks, Tesla uses internal probes, including proprietary generative Gaussian splatting for three-dimensional reasoning. This generates complete scenes in hundreds of milliseconds and integrates directly into the driving network. The world simulator can also replay historical failures, inject adversarial scenarios, and run closed-loop simulations. And crucially, it generalizes to indoor scenes for Optimus, forming the foundation for all of Tesla's robotics work. Elliswamy tied this to some major milestones. Tesla's robotaxi is launching in Austin without safety monitors. The Cybercab is coming this year, and Tesla plans to produce 1 million Optimus units at their Fremont factory, eventually replacing Model S and Model X production lines. The Gen 3 prototype of Optimus is expected in the first quarter of this year. This presentation really positioned Tesla as more than a car company. They're framing themselves as a leader in what they call physical AI, and the pitch is all about creating incredible abundance through scalable, vision-centered AI. Let's shift to Nvidia's CEO, Jensen Huang, who had some strong words this week about the recent sell-off in software stocks. The S&P North American Technology Software Index has dropped 30% into bear market territory, and a lot of that fear comes from concerns that AI will disrupt or even replace traditional software companies. Tools like Anthropic's Cowork, which aims to automate software engineering tasks, have spooked investors. But Huang called this the most illogical thing in the world. His argument is simple: AI will augment, not replace, existing software companies. He used a great analogy at a Cisco-hosted AI summit. Would you use a hammer or invent a new hammer? His point is that AI tools will integrate seamlessly with current products to drive productivity and efficiency, not destroy business models. And he's backing that up with data. Software companies are investing heavily in AI, positioning themselves for long-term growth. So Huang's advice: stay patient and focus on future earnings expansion. The article I'm referencing recommends 5 undervalued AI stocks that are worth watching. Microsoft is down 27% and trading at 26 times earnings. Adjusted earnings are up 24%, and Copilot users surged 160%. Datadog is down 47%, trading at 53 times earnings, with earnings up 20%. They're providing LLM observability, which is becoming critical. AppLovin is down 52%, trading at 45 times earnings, but earnings are up 96% thanks to their Axon machine learning engine. Atlassian is down 70%, trading at 22 times earnings, with earnings up 27%. They're integrating Rovo AI into their platform. And finally, HubSpot is down 73%, trading at 25 times earnings, with earnings up 22%. They're connecting to ChatGPT, Claude, and Gemini. Huang's message is clear: if you're a patient investor, this sell-off might be an opportunity, not a crisis. Here's a story that really captures the intersection of AI hype and crypto speculation. Chris Marsalek, co-founder and CEO of Crypto.com, just bought the domain AI.com for about $70 million. That makes it the most expensive domain sale ever publicly disclosed. The domain was listed by broker GetYourDomain.com with an asking price of $100 million back in March of last year. Marsalek plans to use the domain to launch a new AI agent platform. He's positioning it as a consumer-facing front door to AGI and AI services, including agents for messaging, projects, markets, and quotations, all within a decentralized network. The timing is strategic. Marsalek secured a Super Bowl ad slot to promote the platform, and the launch is planned for the Sunday after the Super Bowl. But here's where it gets interesting, or maybe concerning, depending on your perspective. Is $70 million for a domain name a sign of visionary thinking, or is it a symptom of a frothy bubble? For comparison, Cars.com sold for $872 million back in 2014, but that was an established business, not just a domain. The article raises valid questions about whether this reflects the exuberance, or maybe over-exuberance, of the current AI moment. There aren't detailed financial disclosures beyond the reported figure, so we're left speculating about the broader impact on domain valuations. What's clear is that premium domain names in the AI space are commanding extraordinary prices, and companies are willing to pay them for positioning and branding. Finally, let's talk about Qualcomm and India's semiconductor ambitions. Yesterday, Qualcomm Technologies announced the tape-out of its 2-nanometer semiconductor design. For those unfamiliar, tape-out is a critical milestone in chip development. It means the design is finalized and ready to be sent to manufacturing. This achievement happened in India, specifically through collaboration across Qualcomm's engineering centers in Bengaluru, Chennai, and Hyderabad. These centers represent Qualcomm's largest engineering workforce outside the United States and some of the company's most advanced development capabilities globally. This milestone is significant for a couple of reasons. First, it underscores India's role as a critical hub for cutting-edge semiconductor development. Qualcomm has been investing in India's semiconductor ecosystem for over 20 years, and this is a tangible result of that commitment. Second, it aligns with India's national vision of becoming globally competitive in the semiconductor industry. The announcement was made during a visit by Ashwini Vaishnaw, India's Union Minister of Railways, Information and Broadcasting, and Electronics and IT. He praised India's growing centrality in advanced semiconductor technologies and highlighted the impressive engineering strength in the country. Amitesh Kumar Sinha, Additional Secretary at the Ministry of Electronics and IT and CEO of the India Semiconductor Mission, emphasized the momentum the mission is gaining. He pointed to a strengthening design ecosystem, growing industry participation, and investments in R&D for long-term capacity. Qualcomm executives attributed the success to the depth of Indian engineering teams, who deliver at global standards and contribute across the entire system design stack, from architecture to software optimization. This is a big win for India's semiconductor ambitions and a strong signal that the country is becoming an essential player in the global chip industry. That's it for today's tech news. We covered Google's AI resurgence, Tesla's unified robotics vision, Nvidia's market perspective, a record-breaking domain sale, and Qualcomm's semiconductor milestone in India. It's a lot to process, but these stories show where the industry is heading. We'll continue following these developments as they unfold. Thank you for staying informed with DigiAll Tech News. We'll be back with more updates as they develop.